Hi, my name is Rajesh Hattangady, your shubhchintak, and today's video is going to be a bit different. Different for one reason, is because I'm not going to do the talking today. In fact, I have two videos, and this particular video is all about the recent developments that have happened with the Franklin Templeton 6 schemes which were wound up. I have two videos, one from the President of Franklin Templeton Mutual Fund and one from Sucheta Dalal, who heads the Moneylife Foundation. We are having two different perspectives from these videos, and I'll be summing up with my thoughts on the same. So without further ado, let's invest our time and look at these two videos.
Hello, I'm Sanjay Sapre, President of Franklin Templeton Asset Management, and I wanted to speak to you today about the upcoming e-voting exercise. The Honorable Supreme Court issued an interim order allowing the trustee of Franklin Templeton to seek consent of the unit holders for the winding up of the 6 schemes under Regulation 1815C of SEBI Mutual Fund Regulations 1996, while keeping redemption suspended. SEBI will appoint an independent observer, and the voting result, along with the report of the observer, will be submitted in a sealed envelope to the court. As you know, we have issued a notice on December 7th, 2020 for seeking consent of unit holders, and the result will be announced as per the direction of the court. Let me explain this in a simple manner for all of our viewers. Option 1 will be to vote yes in favor of the orderly winding up. If we get a majority yes vote, the securities in the scheme can be liquidated in an orderly manner without the need to proceed with distress sales, as redemptions are not allowed. This will therefore enable an orderly liquidation of the portfolio assets at fair value. The proceeds realized by the scheme will be distributed to unit holders in proportion to the units held by them at regular intervals. This option will therefore enable recovery of maximum possible value of securities held by the scheme. The authorized person appointed under Regulation 41 would be in a position to take the most appropriate action with regard to liquidation of each security, as there will be no undue haste or selling pressure. The NAV may not be negatively impacted, as liquidation would be orderly and there would be no need for distress sales to urgently fund redemptions. And finally, unit holders will not be required to apply for redemptions. Unit holders will receive regular pro rata distributions of investment proceeds, as assets are systematically liquidated and cash is generated by the scheme. The second choice will be to vote no against the orderly winding up. If we get a majority no vote, firstly, subject to directions from the Supreme Court, the scheme would be required to reopen immediately and may need an emergency liquidation of securities if a high volume of redemptions is received. This may therefore entail distress sales of securities to meet the redemptions received. The market is unlikely to have enough liquidity to absorb such a large quantity of securities over a short period of time, and it may not even be possible to get bids at reasonable prices for all securities in such circumstances. A distress sale of securities held in the portfolio could result in a rapid and steep decline in the NAV, leading to substantial losses for unit holders, irrespective of market conditions. Finally, unit holders will need to apply for redemptions if they wish to receive monies. This may result in a disproportionate distribution of any cash generated to unit holders depending on the time of redemption. Please stay safe and stay healthy. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to Moneylife. This is Sucheta Dalal. Today we talk about Franklin Templeton. Why again? Because just last week Franklin Templeton Mutual Fund sent out emails to 3 lakh investors who had invested in 6 debt schemes which suddenly shut down on 23rd April this year, and said that give us consent for winding up these schemes. In fact, as most of you know, especially if you are an affected unit holder, They were already in the process of winding it up. This has been a hard fought battle because investor associations took them to court, took the regulator to court, pointed out that the regulator was not doing enough to protect investor interest. In this case, when I say investors, I mean unit holders. And there was a long pitched battle at the Karnataka High Court, which heard 3 or 4 petitions. They were clubbed together and issued a verdict. This was on 24th of October. The matter went to the Supreme Court. This is the background. These 6 schemes have a serious amount of money, 26,000 crore, and in fact account for about a third of Franklin Templeton's entire corpus, which is 78,000 crore. Now, what is worrying and why are we discussing it? My worry is that investors are being coerced or frightened into voting for the winding up of the schemes. Now, how is this happening? In multiple ways. First of all, the matter is in the Supreme Court. The Supreme Court has given permission to Franklin Templeton Mutual Fund to go ahead and have the e-voting and get permission from investors. So a letter goes out from the fund where the company says that if you do not agree to the winding up, you have to give a yes or no answer, and if you do not agree, if your answer is no, then it's quite likely that the floodgates of redemption would start, because redemptions are currently stayed, again under court orders, and the floodgates would open and this fund would be forced to sell whatever its holdings, we don't know what they are, at distressed prices, and the losses to investors will be huge. Now, nobody wants to lose money, right? But we want to know how much would have been lost and how much is going to be lost because of distressed sales and can be blamed on redemptions. This is a really good battle that was fought by the Chennai Financial Markets Association and by people like Midas Touch investors. They are in court. This doesn't happen regularly. It takes time for investors to get together to make a cogent case. It has happened this time with great results. Strictures issued by the court are quite amazing. In fact, the Securities and Exchange Board of India, which is the market regulator, one of the most powerful in the world, with all the powers to take action to protect investors, has been doing nothing. And this was pointed out to the court, and in fact the court has said something to the effect that when this is a historic action, it's never before happened in the Indian mutual fund industry, where 6 schemes are being wound up, SEBI seems to be completely complacent to keep a hands-off attitude, not get involved, not looked at whether it is fair, not looked at what is happening. Yes, it is conducting an investigation. There is a forensic audit done. So just 2 days ago, the court said the forensic audit will be submitted in a sealed envelope. Now, my question is this, that investors who have representatives, investor organizations fighting for them, are saying just one thing, which we agree with, which is that why are you making unit holders e-vote blind? Why are you not giving them facts? This is a country which has adopted disclosure-based regulation, which means that SEBI doesn't spell out the rules for everything. It says disclose and investors will take a considered decision. Now, you need facts. If you're going to vote, you need to know when your money is coming back. You need to know what is the extent of loss, and you need to know what is the culpability. I mean, there is a forensic audit. What has it pointed out? Did trustees, fund managers fulfill their fiduciary responsibilities? Did they do all that they could to invest in the right shares? Did they follow what the prospectus of the mutual fund has said it would do? We don't know. What I know is one thing. If the forensic audit had given a clean chit to the mutual fund, you can bet that it would be out in the public and it would be waved around to say, look, we've done nothing wrong. This is force majeure. This happened because of COVID. The very fact that it's sneakily going around and will be in a sealed envelope and be given to the Supreme Court after the e-voting is highly suspicious, and you cannot blindfold investors and make them vote. Like I said, at least three petitions have been arguing in favor of investors. They have gone to the Economic Offences Wing, they've gone to the High Court, they are in the Supreme Court arguing the case, and they're saying more or less what I said. The lead among these is the Chennai Association. Midas Touch is an association which scored the biggest victory for mutual fund investors in the 90s after the Harshit Mehta scam. Now, Viren Jain of Midas Touch has written to Ajay Tyagi, and in fact he says something interesting. He says that Franklin Mutual Fund does not even have 3 lakh email accounts of all its investors. We don't know if that's true. He says that there has to be an audit trail. Now, SEBI didn't do anything, but the Supreme Court has asked SEBI to get into the act and become an observer. Is it true that they don't have email accounts? Only Franklin Templeton can say. But there has to be traceability, there has to be accountability, there's no doubt about it. He also says don't coerce. Chennai CFMA also says the same thing. Do not coerce people by false propaganda, pretending that there's going to be a run on the fund and you will have to make a distress sale. Now, why is SEBI not acting? Why is it that the regulator has to be pushed to do it? And what is this stuff about using people who are loyal to you? We don't know who's doing it, but obviously there are lots of people who are going to gain by saying, get this problem out of the way, because if e-voting happens as it is scheduled between 26th and 28th of December, and all the issues including the forensic audit come out later, then we don't know whether SEBI is going to punish the trust, the asset management company, the trustees, whether there will be any disgorgement, whether they'll pay any penalty, whether this will be added back to the corpus which will be paid to investors. Most issues will be brushed under the carpet is what I think, because no one has the time and patience to follow and keep up the pressure on an ongoing basis. The pressure is today for the winding up. CFMA has in fact put out an old email from people, and here's a chart where it suggests that the haircut that investors may take could be 50 to 80%. Now, Midas Touch says at some time somebody in Franklin said it would take 5 years to return investors' money. Shouldn't all this, if you had a e-voting, if you had a prospectus, if you had an IPO, all this would be disclosed in writing upfront, and the regulator needs to step in and ensure it. Now, every time the mutual fund industry has misbehaved, turned into lenders, done promoter funding, colluded with them to hide it from stock exchanges, it is SEBI which sort of backed it tacitly by not doing anything. When it comes to being proactive at helping investors, why the silence? Why is it that investors, when there's a huge, powerful market regulator, why do they have to go to the High Court? Why do they have to go to the Supreme Court? Why is the regulator not listening to them? This is an appalling state of affairs. If the Indian regulator doesn't stand with Indian investors, it is a little ambitious to think that a US regulator, a US court is going to vote on behalf or rule on behalf of Indian investors in India to be given money. We need our regulators to stand by us. We need our regulators to ensure full disclosure. That's all that people are asking. We are not saying don't wind up the scheme. We are not saying things can't go wrong. All we are saying is tell us what happened, put it on the table, allow a considered decision, right? And tell people what are the likely extent of losses. I don't think you can build a safe investment climate if you allow this to happen. SEBI, wake up. And you as investors, whether or not you're likely to lose money in Franklin Templeton, better realize that this is about you as well, because you have to put your money somewhere. Your interest rates on bank deposits are declining. Thank you.
As you have seen, the points put across by Ms. Sucheta Dalal are absolutely bang on. But when there are videos that come to the investor saying that there could be a panic sale in terms of the investments and the investors may not get their money and they might probably end up losing their money, what does the investor do? मुझे तो लगता है most of the times the investor might say जितना मिल रहा है उतना ले लो, and that is somewhere little unfair on the investor. One, as Sucheta Dalal said, that there has been a lack of transparency, and I feel that we should be waiting for the part 2 of the video that comes out of Franklin Templeton President address to the investors, since this is just the part 1 that has been released. According to me, if I were to do something wrong, and I need to own it up, isn't it? I guess to gain the trust of the investors, maybe my attempt would have been to tell the investors that this is what I am going to do, this is what is going to give them value by staying invested into the fund, rather than somewhere trying to coerce an investor into saying something that I want them to say. But any which ways, giving a yes by the investor to the fund house probably looks the best option as of now. I would keep my fingers crossed and would still wait for the part 2 of the video that comes out of the Franklin Templeton stable. Till the next time, this is Rajesh Hattangady signing off with yet another video next Thursday. Guru Guruvar.